Good morning. This is Carl Dakin, and this is the Successful Funding Show. We're here to talk about funding. Uh, our target today is to talk about the markets, the capital markets, how small businesses should work or react with all of these different things that are going on. And my guest this morning is Eric Hansen. So I will say that one of the factors in inviting Eric to be a guest this morning is he, like I, have been around a while. We have seen the ups and the downs and the ups and the downs. And from that, we can draw a number of ideas about how everybody should deal with or react to what's going on. And some reactions are required. A lot of the stuff that's being talked about or recommended that I've seen in the press should be ignored. and there's too much reactive going on in too many places, which is contributing to other problems, which may cause more and greater problems down the road. But that's what we're going to talk about today. And so, welcome to everyone who is in the audience today viewing this live. This show is recorded and it will be shown on LinkedIn and YouTube, where you can watch it at a later time if you were unable to watch it today. So, with that, what we've seen is that under the new administration, there were a lot of people who thought that this was all upside, good for everyone. And then there are um, uh, people who were thinking this was going to be a terrible situation, and they didn't want to anything to do with what was going on. But then we had Liberation Day last week, where President Trump imposed tariffs across pretty much the entire world, and everybody reacted to that pretty much negatively, which is kind of interesting since the purpose of a tariff was to protect U.S. companies. Why is it so terrible? And without digging into it too much, we want to talk today about how you might want to respond to these different things going on in the marketplace, how it would affect your fundraising, and basically in getting ready to raise funding, how it should affect how you're running your business. So, with that, good morning, Eric. Glad to have you with us this morning.
Good morning.
So, first question for you, Eric. Now that the tariffs are in place, how is that going to impact every business that's out there, good or bad?
Well, let's assume that he doesn't flip flop on this again, um, and that this all sticks as it sits. As
And
affecting
and let's
businesses.
clarify that you think that the tariffs are permanent and they're not simply a poker play to gain an advantage in international trade.
Yeah, let's take both sides of that, right? So let's
Yeah.
assume first off that he's serious. This wasn't a poker play. By God, we're going to make America great again by taxing the US people. That right? So, what are the short term effects? It's bad. It's really bad. Long term effects, um, those aren't so good either. But from a business standpoint, people are going to continue to buy your product because where else are they going to buy it? This is not one of those situations where especially on staple goods like produce and things like that. It's not like you're going to stop buying it. All right. So is it going to be really bad for your business? Maybe in the short term, long term, maybe you sell a little bit less. This is just my opinion. Okay. But the long term effects of it being in play, there's a lot of history that we can go on that tariffs do not work. All right. In fact, you can go all the way back to the Roman Empire, and they imposed massive tariffs on imported goods which actually did exactly what everyone didn't want, and it bankrupted the people. It bankrupted the people who could least afford it. So we have lots of history of that. This administration loves the McKinley administration for some reason. I would challenge anybody to go want to live in the economic times of the McKinley administration. It sucked. Okay. Poor got really poor. The working class got deplorable wages. And if that's what we're trying to bring back is servitude to the employer, well, then okay, that's what we want. But I don't think that's what we want. So that's that side. Long term, it makes no sense, unless, of course, you're trying to raise money for the government so that you can actually give bigger tax cuts to those that don't need it. Okay, that's a whole nother discussion. Short term, if it is just a negotiating tactic, that could be really, really good. And it will be really, really bad. Let me give you an example. So we signed the North American Free Trade Agreement. The whole point was to get more trade between Canada and Mexico and the United States. It was highly successful. It was fabulously successful. And it was the best negotiated deal in history, right? Remember that? And so here we are now saying that was a really shitty deal. And by God, we're going to penalize our allies for wanting to do a deal that was so brilliant. Here's why this is bad. Once you break people's trust, it's really hard to get back. So what we've essentially done is we've said, we didn't like the deal for whatever reason, and we're going to break it. And they're going, but wait a minute, we made a deal. We made a contract with the United States of America. And he didn't make it, by the way, this is where people get it wrong. They made it with we, the people, not him, the president. It was we, the people. So when you break a contract of that magnitude, you have made us all look bad. And this will not be easily forgiven. In fact, I would say from the Canadian side, it will be a generation or two before they forgive us for that. Because we asked them to invest hugely in our supply chain. We asked them to do that. We asked them, they did it, and now they're getting penalized for it. And quite frankly, they're flying the fickle finger of fate at us. And then we go humiliate them more, right? By telling them we don't need anything they have, which is a total lie. And by God, we're going to make you the 51st state. Really? That doesn't seem like a very good way to act. So even if the intent was to renegotiate, you are going to have a long-standing distrust, which is going to be very difficult to overcome. That's my 2 cents.
Well, you raise a few hundred points. I don't know if we'll get through them all
sorry.
this morning. That there's so many different ways I could go down this. I want to stay on topic, but we have an hour, so we'll do a little bit of off-roading here. But one of the points you make is that a treaty, trade arrangement, is a contract between two countries. And if you breach a contract of that nature, then you have a problem, because doing another agreement may never happen. We've all been through agreements as business people where the other side, somebody on the other side broke the agreement, and we have 2 or 3 options that come out of that. One is we quit dealing with that other business altogether. We put them on our blacklist, as I call mine, and I go, I will never do business with that person again because I can't trust them to do what they say they're going to do. And it's too important to me to give them any slack whatsoever. So they're basically they're non-existent. I've written them off. They're non-character. Another problem is that if you break an agreement, you may have created liability because you made a promise, you breached the promise, and in a court of law, you may have to go in and seek damages because the other person failed to perform, if that's possible. And this is where litigation arises, which altogether it typically makes the problem worse. I just say that because having practiced law and litigated things in court, I've rarely seen a litigation in a court or even an arbitration come out with either side as a winner. It comes out as both sides losing a little bit, some maybe more than others, but it never makes you whole. So you always come up short. What The other thing about a contract, which I find, is that too often people treat the contract as though it were part of the tablets of Moses, and that there's no deviation from the contract for the entire life that the stone is in existence. And I tell people all the time, I said the contract is good the day you signed it, and you should be ready to consider amendment, refinement, changes to the contract during the entire term of the relationship, because you have goals that you want to accomplish within a contract. You should try to continue to keep focused on those goals and do not wait until the other side is using, abusing, or breaching the contract if you know that there's going to be a problem. So if we had this contract, NAFTA, and it turns out that Mexico was basically importing Chinese goods, marking them up, and selling them
Yep,
into the United States, which they were,
yep,
um,
they are.
then the thing is that's not Mexico's fault to some degree because the agreement didn't spell out that they couldn't do that. And so if it's a problem, instead of just declaring the contract in default and going to war with Mexico from a trade standpoint, we could have gone back to them and said, you cannot basically bring in transship goods into Mexico and then resell them in the United States. That's not what we had in mind with North America, because as far as we know, China is not part of North America. So maybe we shouldn't be doing that. But this is why we have a State Department. This is why we have people who are engaged in trade. And we may point fingers. We may say, hey, the last administration or the last 3 or 4 administrations let things go, let things get slack, and didn't hold them to the spirit of that agreement, and they were cheating on it, or they were simply working within the framework, and you didn't call them on it. So it to suddenly impose a tariff, with no warning, no preparation, then we can talk about the good, the bad of that. But what I do want to talk about today is if you are a business, particularly a small business, a startup business, someone who is looking for funding right now. So let's narrow it down. If you're not raising money this year, if you're not going to borrow money, you're not going to raise equity money, you have all the money you need for this year, you can pretty much, save this recording for another day, but that's not what I want to talk about today. I want to talk about somebody who needs to raise money today or the next 12 months or worse, because this is the point that Eric was making. We don't know how long these tariffs are going to be imposed, but even if they're withdrawn tomorrow, there's been an element of trust in this contract between countries, which has been disappeared or at least diminished, and it's going to impact future deals. So if you're going to be raising funding and now you're out there in the marketplace, and two things are going on. One is that the people who are making investments, they don't like this any more than anybody else, as we've seen the
Right.
stock market drop over the last week and a half. And so, what they want to do is one, they want to wait until the market is stable. Nobody likes to invest in a volatile market. You can't tell if it's going to go up or down. I was laughing about an article I read where five different financial advisors will tell everybody, take your money out of the US market, put it in the Japanese market, the Nikkei market, because it's going to be more stable than the US market for a while. And then immediately the Nikkei dropped 8 points, 8 percentage points, not 8 Dow points, 8 percentage points. Um, and what it shows is this is a world market. Everything we do every day now, we can claim, that we're part of the United States and we make and sell things within the United States. And tariffs, may regulate what we buy or don't buy from other countries, but by and large, we still sell into a world market, and we have to think of ourselves as being business people at the world level, even if all we're doing is selling ice cream across the counter at the local ice cream store. With that, knowing that investors don't like instability, they're pulling back. They're either going to pull their money out of the market, which is what happened when they started selling off all the stocks, which caused the stocks to fall. But are they going to put it back into the market? And the answer is generally no. They're going to sit and wait. And so we have a shrinking amount of money available to invest in businesses right now. Everyone who's looking to raise money may still continue to look for money, but they're going to have to find it from a smaller group of people who are willing to invest. The other problem is that because of this uncertainty and losses that may have been incurred or the fear of greater losses, they're going to raise the bar on what kind of safety, riskless type of investment they might want to put their money into. So you'll see people putting money into CDs, putting it into gold, putting it into other things. And I'm not recommending gold as a safety mechanism. I'm saying that's what they're doing. Uh, um, and now, not only are there fewer investors, but they are going to hold everyone to a higher standard in terms of the level of risk that they're willing to work with. And so this kind of gets me to the point of, if you're trying to raise money now or sometime in the next 12 plus months, what can you do to make yourself more attractive to those people who are still investing? And that's my next question for you, Eric. I'm only going to give you hard questions, no softballs today.
Well, first off, I think that if you have a great deal of international risk, it's going to be very, very difficult. I mean, it's just is going to be tough because you're 100% right. If in big investment and even small investment, okay, difference between big and small. Small is anything from a couple 100,000 to what, 5 million. That's small investment. If things are perceived to not be stable, you're right. They don't like that, and they don't like it for all kinds of reasons. But the biggest maybe is that when you have that kind of money, you have $5 million you're going to invest. If you're a private home office, whatever your deal is, you're looking for a place you park your money. You're not looking to get a home run. You're not the Black Rocks of the world who are looking for 10x, that kind of thing. So you're looking for a place to park, safety, security, long term. So when you're trying to raise money, think of it exactly like that. Someone is using you as a place to park the money. That means that they want a reasonable amount of money back. They want it long term, and they want it safe. So if you are going to be in the import export business, you're not going to get money right now because it is totally up in the air. If you are a restaurant in Fort Collins, Colorado, that is specializing, this is theoretical BS, right? But let's just say you're Fort Collins, Colorado restaurant serving locally grown, locally sourced food, blah, 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 blah. Maybe your chances of getting funded are even better than they were. So
Yeah,
there's going to be losers and there's going to be winners. Because if you have money, you still can't just sit on it. You have to put it to work.
and there are distinctions here, and this is one of the things we try to do on this show is that there are multiple types and classes of investors, and there's the general population who can do crowdfunding, who don't think of themselves as investors. They just think of themselves as better managers of their money for their household, who may or may not look at this like an investor would, who's looking for just a rate of return. And then the angel investors, the individuals, they have the discretion to sit idle because they're not managing somebody else's money. They have no contractual obligation to put that money to work. So a lot of those will quit investing, go to the sidelines, and wait this out until they get comfortable again. Those people who are managing other people's money, family offices, private equity funds, things like that, they need to put money to work because one,
Hmm?
that's what they're paid to do. And two, if they don't put the money to work, they may not get paid. So there's two parts to that. But as I think Eric's described it well, when they look at the current situation, they go, I need to put my money to work. Where can I put it where it will at least remain the same value? It will not go down in value. It may not go up in value, but at least will not go down in value. And this is, we see this term a lot of people doing what's called land banking. There are businesses which are long-term stable that you could put the money into and be fairly comfortable that nothing's going to change going forward. But there are other businesses that will be clearly impacted, and then it's a degree of impact. So since Colorado imports 94% of all the produce consumed in this state, there may be restaurants out there that are suddenly finding themselves with a supply chain issue because it was coming in from Mexico or is coming in from Peru or any of the other countries where we've imposed a tariff. They may be very seriously impacted. And I think this is one of the first things that recommendation, if you're looking to raise funding, you need to be prepared to explain to an investor candidate where do you get your stuff that you put into your products and services. And if you cannot provide a clear answer and explain how the tariffs will or will not impact what you're using in your supply chain, you're going to be viewed as someone who's basically just kind of reactive to what's going out there. And that's not the kind of answer that the investor is going to be looking for. Because they'll ask you the next question. Well, what if you get cut off? And if you can't give them an answer that's this quick because you've already thought through all the plan A, B, C, D, and E, they'll consider you to be a risky venture and they're going to look elsewhere. So this is one of the things, one of the points that I really want to stress to everyone who's watching the program today is you really need to understand your supply chain and where all your stuff comes from. And you need to be prepared for whatever adjustments need to be made. And you need to have them not just thought of, but you need to be going to the vendors and asking, if I made a purchase, what's my lead time? Because I was talking with a guy who was working with the new data processing centers yesterday. He says, we found a problem. I go, what's that? He says, well, we can put in whatever power source we want to run these large data processing centers, but we need backups. We need generators, whether they're natural gas or diesel or whatever. And he said it's now a 9-month lead time to get a generator into one of these new data processing centers. And you can't start a data processing center without being able to guarantee that you're up 99% of the time. And without a generator, you can't make that guarantee, or you're making it very, very risky fashion. So take a look at what's going on in your business today, find out where everything comes from, trace its genealogy all the way back to the very first nut and bolt that goes into whatever it is that you're doing, and start setting up fallbacks. But when you talk to someone, they say, yeah, we can sell to you, then you need to ask more questions, because that vendor supplier, you got to ask them, what's your capacity? If I ask you for this much, is that going to be a problem? If I ask you for more, is that going to be a problem? And then start thinking about getting contracts, which are contingency style agreements, so that if this vendor falls down, then you go to this vendor automatically, and it's a seamless transition from one vendor to the other with no shortfall. Because if you're that restaurant in Fort Collins and you go, sorry, we have no food for 2 weeks, that's not going to work so well with all the people who are going to your restaurant. So think through all those different things, be prepared, get things in place so that you can explain to an investor candidate, yes, we understand the market's volatile, we understand that supply chains are being rearranged by the minute, but we have worked out all of our suppliers. We know where they're at. We know who our fallback or secondary suppliers are. We have contracts in place. We've worked through those details. And oh, by the way, we're now down to Plan C. We've got those worked out. And we want to make this a place where you can park your money safely until we get through this current ripple effect that takes place in the marketplace. So what I expect is that we're going to see a number of people, as Eric described it, who are at the very tip of the sword, who are going to get beaten up badly and mauled by these tariffs because they can't do anything. They don't know where things are going. The prices are so radically different that there's no margins left. And we're going to see a lot of people very seriously impacted. And I'm talking to my different clients who import stuff from other countries, trying to find out where they're at, what they're doing, how much inventory they have in stock. And we could just cross our fingers and hope that this tariff issue will be a short-term poker play and everybody will come to an agreement. However, they distrust each other going forward, they're going to reach an agreement, and we can see smoother sailing in the future. But we don't know how long this is going to take. So we have a level of uncertainty, which investors hate. So Eric, other than working on supply chains and so forth, what else could a business do to make itself a good place to park their money?
So, in this unstable situation we have, self-imposed, if I was in a, depending on the business, okay, so let's say that we'll go back to the restaurant scenario, and all of a sudden expansion money is very tight in an already difficult market. So I've done all the things, Carl, that you just said. I've done all these things. I've traced back. I know where everything is. I know, I get what's happening in the real world. I really do understand. And so the guy comes up to me and says, what about the eggs? What about the eggs? And you go, well, I don't know about the eggs. Well, yeah, but you're a restaurant. You got to know about the eggs, right? You're right in that you have to have an answer for this very simple, but as it turns out, highly impactive thing that has nothing to do with tariffs, by the way. But this gets back to when you're looking for money, it isn't all about the tariffs. It isn't all about everything else. When you're looking for money, what are you really doing? You're selling you. You're selling you, you're selling confidence, you're selling all of those other things that have nothing to do with the outside world. So if you can't do that, you're in trouble. But if you can come in and say, listen, I have a great market. Look at my demographics. Look who I'm selling to. They are going to pay 50 cents more for the egg. And I know this may be a bad example, but they're willing to pay because They love our food. They love our service. They love our experience. So if I was a small business and I needed money, that's what I would be selling. I would make sure I had everything covered, but sell that and forget about trying to and alleviate all of this white noise. I call it white noise, right? Going on in the market. Get rid of all the white noise because whoever is going to invest in you already knows about the white noise, right? They're going to make this, regardless of what people really believe, people who invest still invest emotionally, which is probably why people sit on the sidelines because emotionally it's just too much. They're going, oh my God, look at what happened to the market today, or this or that, or the next thing. But if you can get them emotionally attached to what you're doing, whether you're a machine shop. I mean, I have a good friend who owns a machine shop down in Greeley. Their business is booming because people want to repair rather than buy new. There is when all this chaos happens, there are winners. And so you need to be able to tell your prospective person why you're a winner and why you should bring the money in. I need a new CNC machine because I have people that want a part that they now have to buy from, I don't know, Venezuela. And now I can make this part right here in Greeley, Colorado, if I have the CNC machine. That's my 2 cents to the whole thing. Now, if you're big
But
companies like Ford, you're in trouble. Go ahead.
no, but this gets into the true entrepreneur of ship of the glass is not half full or half empty. It's just the wrong size glass. To the
Yeah,
same extent that we're facing all these challenges, we're trying to deal with all these risks. There are also going to be opportunities, and one of the things that investors will like to see is going, yeah, you're talking about all the other stuff, but quite frankly, that's also impacting all of my competitors. We're all, suffering the same thing. Eggs are, high priced unless I'm growing my own chickens in my own backyard, and I'm not buying them off of these supplier networks. And the problem with the eggs, quite frankly, has to do with the avian flu, which the US government completely has failed to address in any meaningful fashion. All they've been doing is handing out checks to farmers to pay them for the 71 million chickens that have been killed to try to prevent transfer of this disease. And they have done very little to try to stop it in any of the many fashions that might be available to them. So this is another thing on a federal government where we go, oh well, the government's going to take care of that. That's not a good practice for a small business to ever assume that the government's going to be your friend. That this creates opportunities. So there may be other things out there that all this chaos is hurting you, but it's also hurting your competitors. But if you find an opportunity like this machine shop where you're going, well, since I cannot import this from another country, what are my choices? What can I do to make myself superior in a competitive world? Because at the end of the day, when an investor is looking even to park their money, they're going to choose that business which has a superior plan for parking their money. The one who's looking at opportunities, who's taking advantage of these things that are going wrong over here in order to create a brand new opportunity over here. And and so when somebody says goes through the litany of the white noise as Eric described it, yes, we know there's a problem. We've done this. We've checked all those boxes, but we've recognized the following one, two, or three opportunities that have occurred because of this, and here's what we're doing to take advantage of those. This is the kind of thing that investors want to hear. They're looking for any good news, and this
correct.
is something that will separate you from everyone who's just in a reactive mode. You've now become proactive, and you're taking advantage of this change in the market to to move forward. So I think that is something also, is that, get your team together, do a brainstorming group. I'm actually having one tomorrow afternoon with one of my groups where we're trying to figure out how to take the change of artificial intelligence and flip it on its head and make it an advantage, as opposed to having issues with implementing it or dealing with it in a negative fashion. So we're all going to get together. We're going to spend a day doing nothing except taking AI and saying, how can it be used to make our life better, to make our job better, to provide better services to my clients and those that I'm working with. And we expect to come out of this with some proposals for funding in the middle of this chaos, where we're going to go, yeah, uh, you have all these problems. Well, we can solve some of them because we're going to take AI over here and use it as a countermeasure to the chaos that's in the marketplace. And everybody's going to go, well, that's a good idea. I'm getting already positives on this. We haven't designed it yet, so hold on. We'll get back to you soon. But this is the kind of thing that when you're talking to an investor, they're a little spooked right now, and they are conservative. They are looking for something that, as Eric described it, it needs a little longer life. People who are day trading are, maybe drinking their own Kool-Aid by jumping in and out of the market, thinking that they can predict a market that's completely unpredictable. And at the same time, anything that's short term could get crushed. So investors start looking for something that's longer term. They're looking for what I call a bridge across the chaos. They're saying, well, if we don't think the market's going to settle out for a year, then we're only going to look at investments that are a year and a half to 2 years as the shortest term that we're going to consider. So tell us how you're going to park the money for 1 to 2 years so that on the other side of this thing, we get our money back. That's parking the money. Now, if it turns out that you're using the time wisely to gather your forces and get ready to jump into the market as it settles out, then now you're putting yourself in a competitive position. You're making yourself look good, and the investors going, they should come out of this market, hot. They'll be ready to go on the other side. They won't simply have retreated to where they were a year ago, or they won't say like 2 years ago by and we'll be in the exact same place we were. They're doing things. They're taking steps to improve their position, whatever it happens to be, to make themselves better. So with that, now that we've got our house in order and we've trying to figure out how to position ourselves as a safe harbor, a reasonably short-term but longer-term investment where they can wait out the storm until the storm is over. What else can a business do to make itself stand out, be more attractive to those investors who are still in the market but still spooked?
So, my personal opinion is that we're going to see quite the contrary to what we're talking. We're talking about how to get investors pulling out of the market, walking away, seeking safety. All of that's true. But what we're not really addressing is investors. I think that there's going to be a boom for small investment money. And I think it's going to, and I think that crowdfunding, not necessarily in the crowdfunding way that we're talking about with Kickstarter and that kind of thing. That's not what I'm talking about. I'm talking about, regulation CF kind of funding in a formal setting. I think it's going to boom. I think that the market is absolutely ripe for people in this country to invest back into the country. Not because of our federal government and all of that. It's just we started this trend in COVID. Okay. So when COVID happened, the supply chains were a wreck. Supply chains became a nightmare. And so onshoring started happening right away. Will tariffs increase that? No. What will increase that is exactly what you're talking about, Carl, and that is the price, I think, is going to become less important than the supply chain itself. And that's a concept I think that people haven't quite got their hands around. But if you look at small business, they started doing that. And we're talking small business, 5 million in funding. They started recognizing that during COVID because they couldn't get what they needed from afar. So this is just one more pile on effect. And I think you're going to see this even bigger. Okay. And especially for those people who are prepared, who are doing the kinds of things that you're talking about, you're going to see more people get involved in this small market funding. And I mean, I was just yesterday talking to the people at Republic, and I think, Carl, you know those guys. They have more Reg CF deals in the pipeline now than ever. Well, but it took a long time. So you hear where I'm coming from. To just simply go do that, this didn't happen because of the tariffs. This happened planning 2 years ago to get this Form C ready to go and submitted. So, but now the tariff is just adding one more thing of fear, right? And I got to secure my supply chain. That's my
Well, right, but there's. I'm going to go back pre-COVID to the easy money policy that
right.
was
Yes.
started in Obama, and the reason why I'm talking about this is we have a capital market, and if it were truly a free and open market, which it's not, it's a highly regulated, highly subsidized, highly biased market, and we have to deal with all those issues as a small business. But during the Obama administration, they decided they would try to reduce the cost of money and in order to offset some of the past problems that we were going, the last deal, before the last deal, before the last deal. And what happened was that this easy money policy favored larger businesses. They could borrow more money. They had access to the capital industry and financing, which the small businesses didn't. This created an effect within the capital industry where more money was shifted into large businesses as a consequence of the fact that they had an ability to do more and operate at lower cost. And this was the small businesses suffered. Then COVID comes along, and COVID caused all kinds of different issues. But one of the things, the reaction to COVID was they jacked the interest rates up because inflation occurred. And this took the easy money policy and tossed it out the window. So this has been contributing to what Eric was talking about, where he started seeing people going, well, now I've got a more level playing field between the small and the large businesses. And because of what happened back in the 2008, 2009 Great Recession, we created crowdfunding to make these markets more open to small businesses because they were getting crushed and they were the ones who were creating the jobs. So we saw these changes taking place. And COVID raised all these other issues, but its primary impact here was, yes, we're going to start looking at small businesses. What I think we're seeing with these tariffs is that the tariffs are going to impact larger businesses more negatively than small businesses. There's going to, and I say that very generally because we know there's going to be a lot of small businesses that are just going to get crushed. They're in the wrong place, the wrong time, with no margins, and they're right at the tip of the import-export business, and they are going to take a beating. But in general, small businesses now are going to go, we're more agile, we're more flexible, we're not caught up in these large multinational multi-year capital projects. So we can move quicker. We can adjust to these tariffs quicker. We can take back market from some of the large businesses. We can take back market from some of the international, multinational businesses. And I agree with Eric. I think what we're going to see is more and more people looking at, well, and now with the tariffs, with the stock, what happened then during all this time, and particularly over the last 4 years over COVID, all these things that were done to dump money into the marketplace by the administration also benefited large businesses more than small businesses. I'm not saying that small businesses didn't benefit, but the large businesses are getting 8 kinds of tax credits and benefits and rebates and federal money and all this kind of stuff, and the small businesses occasionally would get a nickel or a dime somewhere along the way. And now with what happened was everybody going, well, if I'm going to invest as a Joe and Sally citizen, it's easier to just put my money in Wall Street. Wall Street always goes up, right? The market always goes up. And over the last 4 years, that's pretty much has been the story, that all this money dumped into the economy benefited Wall Street, and the safest apparent thing was for people just to buy stock and whatever index or mutual fund was out there. What has happened with these tariffs is we've now the market is suddenly going through an adjustment. It was overpriced. It was not a rational pricing going on because everybody believed that it would always go up, and now we're making adjustments. Well, this is a loss of trust by the average person in Wall Street, in the same way that we now have our trade partners around the world have lost trust because of the tariffs. And this is going to cause people to look at their money that's in their mutual fund and go, maybe I should park this in a business I know down the street rather than in a company that's doing something internationally that I don't understand who they are, what they do. I defy most people to explain to me in NVIDIA, what is it that they do? What business are they in? Their stock has been going to the moon and then back down again. But the average person goes, I don't know what they do. I don't know why it's important. Something to do with artificial intelligence. And you're sitting there going, yeah, it's one of these things. They're selling shovels and picks to the gold miners going out to the gold field, but they are not finding the gold. They're not making the gold. They're just selling supplies. I think what we're going to see, I agree with you, Eric. I think that we're going to see a much more rapid growth in investment crowdfunding, the Reg CF, Reg A plus stuff, because of the fact that people are going, I want to invest in something I understand more, that's more in my backyard, something that I can wrap my mind around, and I'm going to be less prone to putting my money into Wall Street and stocks that are traded on the major exchanges, because they're now just proved to me that they are not a guarantee that they will always go up. And so we go through this, and this is one of the things about being old enough. We've seen Wall Street crash so many times that we recognize that it's not a guaranteed up, that there's good days and bad days. And anyone who tells you that Wall Street, on the average is making 5, 6, 7, 8% per year is doing this over a long period of time and not talking about the roller coaster, where if you're coming up for retirement at the wrong time and the market goes down, you're wiped out. And you're going, I don't have time to recover before I need to get my money out for my retirement or for my health or for whatever's going on. So I think we're going to see a lot of shift into crowdfunding, but I think crowdfunding still has, it needs to grow up, it needs to mature, it needs to quit thinking of itself as a get rich quick, offer a micro angel investment, and it needs to be thinking about putting it into places to park your money over a period of time, which are good for the investor, but also good for the local economy. So I think we're going to see some improvements there, but we also have to get out of using a Wall Street model on crowdfunding campaigns.
Yeah. So I'm going to go out on a limb here just a little bit for you. So crowdfunding, you and I both had, yeah, there we go. So crowdfunding, you and I have both operated and owned our own crowdfunding platforms. And we identified a bunch of problems with why at least Colorado crowdfunding was, quite frankly, it was an abject failure. It didn't work. Um, and crowdfunding nationally, RegCF, only I think recently has started to take hold in being successful. But the biggest issue for crowdfunding has always been, okay, I bought into Eric and Carl's widget making company. That was great. I own my 5 units of this. 10 months later, shit, I've got to sell this because grandma needs something, or you go down the list. I have a health problem. Whatever the deal is, I need out. The traditional crowdfunding has no exit strategy for people. It doesn't exist. So I think what's going to happen is in fact, you're starting to see it right now. You're going to see this is a bad word for most all of us, but we're going to start seeing the crypto industry and the crowdfunding industry blend together. And what I mean by that is we're going to start seeing, and this is going to create, you want to talk about getting an investor to like you more for the $5 million investment. We're going to start to see this happen because now the $5 million investor or less can invest in a company, have a real asset. It is a cryptocurrency. And then within a year, this can start being traded in the real world markets, but it's in the crypto markets. But at least now, as an investor, you're going to have the stability of investing local. You're going to have all of the things by helping your local community, if that's part of your mode. Which, as a person looking for money, you have to find that if that's one of the motivators. But long term, you're going to have the rules that allow you to trade your product, your investment, your crypto coin if you have to. And I think that's going to be a major, major deal down the road as crypto starts to learn it has to get credibility, right? You know, if you're a Bitcoin guy, you think it's credible anyway. We won't even go there. But you know, that's a whole nother psyche. I don't know. I don't get it. Okay. But if you're investing in, we'll use the machine shop in Greeley. If you're the machine shop in Greeley, you don't have anything equity, quote, equity that you can give up, right? You don't have anything, really. You don't have anything. So I give up 10, 20, 50% of my company in equity to buy the CNC machine. Well, okay, I got the money. How does the investor get their money? Well, there's mechanisms, right, Carl, that you can build to do that. Or you can not sell any of your equity and you can sell the person a crypto coin that's based on the revenue that the CNC machine makes. It's a very cool concept, and I think it's going to make investing in small business boom. And all of this tariff stuff we're talking about that's upsetting the markets, they're going to gravitate to that kind of a concept.
Well, I think that some changes still need to occur in the marketplace. And um, one of the common viewers on this program, Zach Dane with Revolve, where they're working with real estate and they're having the same issue that we're talking about today, which is if I invest in real estate is commonly understood as being an illiquid asset. It's very difficult, once you put your money in, to get your money back out of it when you need it, as you need it. And but what Zach is doing is he's moving ownership into a security, which is then into essentially an NFT or token. And there will be a marketplace that is created by setting up an online shopping cart where people can put their stuff up for sale or not. Now, part of the problem there is if this ownership is not generating any income, then it's very difficult to get somebody to step into the shoes into what is called the secondary market or the follow-on market for these sales of stock. And what Zach is doing, which I think we need to look at for some of these other applications, is they're making sure that the investment is cash flowing in terms
Yep.
of a rental of some kind of the property. So if you're holding this stock, whether it's in the original purchase or a follow-on purchase, you're going to see income coming off of this property as it goes forward. And I think that if businesses really want to take advantage of crowdfunding, they're going to have to do something similar where they structure either a revenue share or some other type of interest equivalent, but some kind of money flow that's going to the holder of the stock at the moment, so that there's a reason for someone to step into their shoes in the secondary market. If it's a buy and hold and hope, that something good is going to happen down the road, then I don't know we're going to get there. And this is, I've been working and writing for the last few weeks on investor exits because all too often, and I've talked to a dozen businesses in the last 2 weeks where I go, well, how do you get your money back out of the investment? And I hear crickets. And I'm
That's right.
going like, I have no interest in talking to someone who tells me to hope that you're going to do the right thing. I want to see a plan. I want to know how you're going to do it. I want to know who you're going to do it with. And I've only seen one deal in the last 2 weeks where there was any kind of planning, any kind of preparation for the exit, where they actually were intending to be acquired. They'd already identified 2 or 3 acquisition candidates, and they still needed more work to go to describe what they needed to do to get qualified to be acquired. But this was going in the right direction. Well, if you take a micro investment of $100, $1,000, $10,000 into a small business, that business needs to create some kind of ongoing revenue that is as close to a guaranteed revenue stream as they can make it, I think, where otherwise there's no reason for someone to come into the secondary market and pick it up. A lot of these businesses are never going to be the Google or Facebook. I mean, 99.999% are never going to be that. And so what they have to offer as an alternative is another income stream to the household who's investing with household budgets. And this is one of the things that I think we need to be looking at and thinking about, which would change the nature of a micro angel investment through crowdfunding from I'm going to get rich quick to I'm going to make a little bit of money every month that contributes, where I can start stacking up these small trickle revenue streams to build my wealth over time while I'm investing in a local business. And so I think that's going to be a great topic for an upcoming session because we're going to need to come up with some good examples of how to take a small business apart, make it suitable for investment crowdfunding that would check all the boxes we've talked about. There's got to be a follow-on market. There's got to be an incentive for someone to come in and step into the shoes of the original investor or the secondary investor or the third investor down the pike.
Did we run out of time?
Yeah, we've got 1 minute left. So sum it up for us, Eric.
So, yeah, I agree with 100% of what you just said. And so I think because of the crypto world, mainly because of the blockchain and smart contracts, they're going to be a vital part of being able to make sure that the transparency happens where none exists now. So, or very little exists now. So, if you write into the smart contract, and I love your example because I think it's the winner, that we're going to do 1% of the gross revenue. It's just 1%. And it's written into the smart contract. Then that happens. Well, let's go look at one of the most famous, Berkshire Hathaway. They make more money, to prove your point. They make more money every year for their clients based on dividends than any other thing they have. It's incredible. So if you take that model to small business and you only get 1%, or maybe it's 0.5% of revenues, whatever the number has to be, but you multiply that. So now I can go starting at age, 21, instead of going into the market and investing in any company, NVIDIA, instead of risking everything that it's going to go up forever, which it will not, now I invest in companies that have a really tiny dividend to me or a profit sharing or whatever. But I can do that for the very, very long term. Now I have something that's really important, and that's called residual income. And I think, Carl, that's what you're selling. You're selling residual income, because how many people can actually go out and buy a house or rent the house and have enough houses that when they retire, they have enough residual income to live? My argument would be very, very difficult.
Right. And one of the other things that I also talked about over the last few weeks is if you are selling to your you're raising money from your customers, where you can give them a discount on purchasing, which might have a greater value than the residual income. Now there's two benefits that have been brought together in a way that creates a return that is directly impacting the household budget. Because if I invest in that local grocer or that local dry cleaner or the local liquor store or whatever, that restaurant that you've identified that's all buying everything locally, then if I get 5% off of my tab every time I buy there, that's money in my pocket. That's money in my household budget. If I also get a dividend in the form of a distribution of revenue from that restaurant, that's coming into my account where I can spend it on whatever I want. But if I'm truly managing my money towards long-term wealth, then this is part of my savings program. It's part of my investment package, where I may not have had an investment program before. Now I have one. And then if I can invest in a whole bunch of businesses over time, even maybe doubling down on some of the businesses that I already invested in by going into the secondary market and buying up another dividend distributing type of portfolio, then I've got more options. So I think this is where we need to see more refinement, more maturation in the crowdfunding market. I do think that people are now are being forced to take a second look at these other types of investments, with Wall Street going backwards at the moment, and understanding just how volatile, how propped up the pricing is, and how oriented it is towards large business, and now considering maybe small businesses as a reasonable alternative to what they were doing before. So that brings us to the end of our hour. Eric, thanks for your input on everything today. Hopefully everyone who's seen this show today has learned a little bit about how to prepare themselves to be better off in raising funding during these chaotic times. And we'll look forward to seeing you in 2 weeks. No, make that, I'm sorry, 3 weeks. The next 2 weeks, I will be out of town and unavailable to do the show. So we're going to skip forward to the end of the month. And but we're going to come back, and I'm sure we're still going to be talking about this issue. But thinking about how to craft your business to make it the most attractive, shiniest object when there's a lot of problems out there. So thank you to our audience, and we'll see you in 3 weeks.